Ladies and gentlemen, this is another day we are privileged to carry out revision of management accounting revision. We are going to revise a past paper question that was examined in December 2014. That is question 1. We are going to revise. Don't forget, revising. And when you come to revision class, we say carry a book, carry a pen, carry a calculator, and carry 2 pens, by the way. Just make provision in case one pen fails you. Sometimes pens can fail you. So you need to have at least 2 pens and a book so that you also participate in the process of learning. It's important. You participate, because don't forget, at the end of the day, you are the one required to gain skills. You are required to gain speed, especially for those appearing for examinations. Speed, you only attain speed through practice. So these lessons gives you an opportunity to practice. As much as you are gaining skills, you need to gain speed for the purpose of examination. So right away, we move into the question. December 2014, question 1. I read. Read with me. Afya Bora Health Center has a capacity of 20 beds. The following information relates to the center's operations for the year ended 30th September 2014. We are given the information in a table that has 2 columns, as you can see. The first item in the table is repairs and maintenance, which you are told is a fixed cost, amounted to 150,000. Rent per month amounted to 225,000. Food supplied to patients, we are told this is a variable cost, amounted to 1,080,000. Laundry charges, these are variable costs, amounted to 540,000. Medicines, variable costs, amounted to 900,000. Other expenses, these are fixed expenses, amounted to a cool figure of 1,080,000. We have salaries per month. Salaries paid to supervisors, 30,000. Salary paid to nurses per month, 30,000. Salaries per month, ward assistants, 15,000. That is the information in the table. Below the table, we have additional information. Number 1, the health center operated for 300 days during the year. For 200 days, the bed occupancy accounted for 100%, while the rest of the period accounted for 80% occupancy. Number 2, the health center engaged external doctors to attend to the patients at an average fee of 300,000 per month. Okay? The doctors' fees were paid on the basis of number of patients attended by them. Number 3, during the year, 2 supervisors, 4 nurses, and 2 ward assistants were engaged throughout. Number 4, profit is loaded at a margin of 50%. A margin of 50% required. 1, charge per day per patient. 2, number of patients days required to break even. So that is the question. That is our question. We are expected to answer. Remember, you are a cost accountant. You are an accountant. You are supposed to account and help the hospital or the health center to determine the charge per day per patient. Okay? And don't forget, this is one of the main reasons for cost accounting. In our normal class, we said it's important to do cost accounts, to do cost accounting in an organization, because one important reason why we do carry out cost accounts is so as to enable us determine the selling prices of products or services. You can see this is a hospital, this is a health center, and this health center provides services, health services to patients, and these patients are required to pay. And how are they going to pay? They are supposed to pay based on the cost. The money that they are supposed to be charged should be able to meet, first of all, the cost, the total cost. Then once the total cost has been met, these patients need also to pay profit. They need to pay money which may be enjoyed as profit for the health center. So the selling price, don't forget, comprises of cost plus profit. So in charging the money to pay, for the patients to pay, as an accountant, you need to help to accumulate the costs. And note number 4, we are told that the profit is loaded at a margin of 50%. Okay? So that is very important. It's very important. So how do we determine the charge per day per patient? How do we do it? We need firstly to calculate the total cost. Total cost. We've been given costs, so we need to aggregate these costs. Then we sum the costs. Then we'll calculate a margin, a profit margin. Profit margin. We need to determine a profit margin. Then once we have done that, we'll be able to calculate the charge per day per patient. Okay? Charge per day per patient. And that's what we are going to do right away. Right away. We are going to do exactly that. So the question is December 2014, question 1. December 2014, December 2014, question 1. Part 1 of that question. Is it part 1 or A? Part 1 or A? Part 1. A. Part 1. The question is charge per day per patient. Charge per day per patient. Charge per day per patient. How do you calculate the charge per day per patient? How do you calculate the charge per day per patient? Okay, this will simply be equal to the total revenue. Total revenue minus the number of days, minus the number of days, minus the number of days, over this, not minus but divide the number of patient days. Okay, number of patient days. So and we know that total revenue, we are going to accumulate. We know total revenue, recall total revenue is equal to cost plus profit. Cost plus profit. So we can only determine this total revenue by first of all getting the total cost, then we add the profit margin. We add a profit margin, We've been given a profit margin, which is a percentage on the selling price. We'll come to that in a short while. So from this question, we can now accumulate the costs. And don't forget, the costs are classified. The costs are classified into variable and fixed. Like repairs and maintenance, you are told is a fixed cost. Rent, you've not been told whether it's fixed or not. But we We learned in normal class where to classify rent. Rent is a fixed cost. We have food supply to patients is a variable cost. It's important for us to, as we are preparing the cost per patient per day, we need to identify what are variable costs and what are fixed costs, because not the second requirement, we are supposed to prepare the break-even point. And in preparation of break-even point, we need to know what are the fixed costs and what are the variable costs, because don't forget break-even point. For you to determine the break-even point, you need to divide the fixed costs by contribution per margin. Okay, so the statement that we are going to make here is supposed to be in such a way that it will aid us in answering part 2 of the question. Okay, so we don't just accumulate the costs. We need to, as we are accumulating the costs, we need to classify the variable costs and the fixed costs. So we'll start by looking at the variable costs. What are the variable costs in this question? Variable costs. So we can have two columns here. Two columns. Are the figures in thousands? No, the figures are not in thousands. So we have, we've been told food is a variable cost. That is from the question number 3. In the table number 3, food supplied. We are told here food supplied to patients is a variable cost. So we have the cost of food. Food is a variable cost. We are told food is 1080. 1080 is a variable cost. We are also told laundry charges. Laundry charges is a variable cost. Laundry charges. This is a variable cost. Laundry charges is 540. 40. Medicines, variable. Medicines is a variable cost. Medicines is 900,000. 900,000 is a variable. Then we are given doctor's fees. Doctor's fees. And doctor's fees, we are told that doctors are paid 300,000 per month. 300,000 per month. 300,000 per month. You see, this is a lot of money compared to what ward assistants are getting paid. Okay? No wonder students, if you ask students what would you want to become when you grow up, 90% tell you doctor. Could it be because the doctors are being paid a lot of money, or what is it? You see, they are being paid 300,000 per month. So we are going to calculate. Remember, we are aggregating the records for the year, the whole year. So we multiply 12 by 300,000. 300,000 doctor's fees is variable. So we will calculate that. We come to that. We'll sum. That will give us the total there for variable costs. Then from the question, remember these are variable costs. Variable. We started with the variable. These are variable costs. Variable costs. Then we have fixed costs. Fixed costs. We are told from the question. We just copying. There is we are told repairs and maintenance are fixed costs. Repairs and maintenance. The repairs and maintenance is 150,000 per annum, 150,000 per year. We are given rent per month. Rent per month. Rent for 1 month is 225,000. That is 1 month. You multiply by 12 to get rent per year. Rent, we have not been told if it is fixed or not, but we know rent is fixed. You pay a fixed amount at the end of the month. So that one is definitely a fixed cost. Then we have other fixed expenses. We've been given other fixed expenses. Other fixed expenses from the question we are given 1080. Don't forget there is a figure here which requires a calculator. Then do we have any other fixed costs? Yes, we have salaries. Definitely salaries for salaries for supervisors. We have salaries for supervisors. Supervisors, how are they paid? Supervisors are paid, from this question we are told, 30,000 per month. And from the question we are also told there are two supervisors. Two supervisors. So the salaries for supervisors for 1 month is supposed to be 10. 2 times 30. 2 times 30,000. That is the salary for the two supervisors per month. 2 times 30, which is 60,000. And that is per month. So we multiply that by 12 to get the salaries for supervisors per year. For 1 year, it will be 2 times 30,000 times 12. The same story with nurses. Nurses are paid how much? Nurses are paid 30,000. Nurses are paid 30,000. Nurses are paid 30,000. And how many nurses are here? From the question again, you can see we have been told there are 4 nurses. So 4 nurses, we'll have 4 nurses times 30,000. 4 nurses plus times 30,000, that is the amount that is paid to nurses per month. So we multiply that by 12 to get the total amount that was paid to nurses. Then we have ward assistants. Remember, these are fixed costs. Ward assistants. We have ward. Is it ward or ward? Ward assistants. Ward assistants. Ward assistants. How many are they? How many are they? We have 2 ward assistants. So 2 ward assistants. Each ward is paid how much? Multiply. Each ward assistant is paid 15,000. 15,000 per month. So 2 times 15 will give us the amount, the money that is the salary that is paid to ward assistants per month. We multiply by 12 to get the amount for salaries for ward assistants per annum. We'll have that figure using calculator. So do we have any other cost? No cost. So we take a calculator, scientific calculator, as you take also your calculator. Then we can do the calculation. These are variable costs. We can sum the variable costs. Doctors, remember, they are paid 300,000. You can see doctors are paid 300,000 times 12. You can see the amount of doctors are getting from this hospital. We have 3,600. 3,600. Okay, 3 million. 3 million, and there are 12 doctors. There are not 12. The total aggregate for doctors is 300 per month. Then times 12. Then you have per year. So we'll get the total fixed variable cost. Add 900,000 plus 540,000 plus 1080,000. That's equal to 6.12 million. 6.12 million. That is the total variable cost. Then we come here, move down to the fixed cost. Fixed cost, we have 225,000 times 12. The rent. The rent is equal to 2.7. 2.7 million. 2.7 million is the rent. Then what else? You have salaries. Supervisors are paid how much? 2 are paid 2 times 30,000. 2 times 30,000 times 12. Times 12. That is 720,000. 720,000. 720,000. Then we have nurses. Nurses are paid. Total salary for nurses 4 times 30,000. 4 times 30,000 times 12. 1,440,000. Then finally we have ward assistants. Ward assistants 2 times 15,000 times 12. 360,000. 360,000. Those are the fixed costs. Then we aggregate plus 1,440,000 0,000 plus 720,000 plus 1080,000 plus 27,000 plus 150,000. So I get total fixed costs I get here is 64,50,000. That is the total fixed cost. Then we will add the variable cost plus variable cost of 61,20,000. So 1257, 0, 0, 0, 0. So that is the total cost. Total cost. The total cost is 12,570,000. 12,570,000 is the total cost. Okay, that is the total cost. Remember, we are looking for the charge per day per patient. For you to get the charge per day per patient, you need to have total revenue over a number of patient days. So we are in the process of determining the total revenue. Before you determine the total revenue, we said recall total revenue is equal to cost plus profit. We have our total cost. So we need to add here, we need to add the profit to this total cost, profit. We need to add profit to the total cost. And what is the profit? You follow the directions given in the question. Follow the directions given in the question. In the question you are told, note number 4, profit is loaded at a margin of 50%. Profit is loaded at a margin of 50%. And recall, we say that margin is a percentage profit on sales. Margin is a percentage profit on sales. In this question, we need to apply 50% on the sales. But you can see here, we don't have sales. You can see we don't have sales or revenue. We need to have here selling, sales. We don't have the sales. So what do? We are supposed to apply 50% on sales. We need to apply 50% on sales. We don't know the sales. We are not being given the sales. In fact, we are looking for the sales. But the question is telling us profit is 50% on sales. So the sales is known. It's supposed to be 50% on sales. So we cannot apply 50% on what we don't have. And we are saying when you are given margin, don't forget, margin is always, it is a percentage, it is an expression of profit as a percentage on sales. Because profit can be expressed as a percentage on sales, or it can be expressed as a percentage on cost. Where profit is expressed as a percentage on cost, that is what we call markup. Markup, don't forget, we are revising. This is revision. Revision, we are revising what we learned. What we learned, we are revising what we learned. We say that markup, 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 markup. We are saying profit can be expressed in two ways. You can express profit as a percentage of, as a percentage on cost, percentage on cost. Where you apply a percentage on cost, we are saying that one is a markup, percentage on cost, that is markup. But where you apply a percentage on sales, when you apply percentage on sales, that is margin. So in this question, we've been given the margin, which we are told is 100%. Is it 100? 50. It's 50%. So for us to get the profit, we are supposed to apply 50% on sales. But in the question, we do not have the sales. So what do? Okay, what are we supposed to do? We need to determine the sales so that we can apply 50% on sales to document here the profit, which we now add on the cost to arrive at sales. So we are told there are many ways of calculating this one. There are many ways. One of the best way is not by making sales unknown. Sales here is unknown. So we are told from the question that profit is equal to 50% on sales. In our case, sales is unknown, which is X. But remember that we said there, we even wrote, we say that sales is equal to cost plus profit. Don't forget, this is very important, very important. Sales is a function of cost and profit, okay? Is a function of cost and profit. So in our case, we have cost. We have the cost. We do not have the profit. We do not have the sales, but we have a percentage. We'll work with the percentage. We'll work with a percentage. So our profit here becomes, you are saying in this case, sales will be equal to cost, which we have. We have the cost. The cost is 12,570. The cost is 12,570. Okay? That is million. Then we do not have, we are saying our sales is unknown. Our sales is unknown, and we said let our sales be X. Let our sales be X, which is unknown. So let our sales be X. So we substitute here with X. So our X, or our sales, which is X, is equal to the cost, this cost plus the profit, which you are told is 50%. 50% of sales. Our sales is X. So we write 50% X. Okay? This is mathematics, simple mathematics that was covered in Form 1, those who went to school. This was covered in Form 1 syllabus, or is it Class 8? Okay? So here now we can, using this function, we can determine the value of X. We can determine the value of X. Okay? We can easily determine the value of X by grouping the like terms. Grouping the like terms. When this 50 crosses this line, okay, when it crosses this line, it becomes a negative. Becomes a negative, okay? Becomes a negative. So we have X minus 50X is equal to 12,570. Okay? X minus 50X. Okay? And don't forget, this is supposed to be a percentage, 50%. Let me correct this. It's supposed to be 50%. Let me correct it. It's supposed to be 50%. 50% X. Let me correct that. It's supposed to be 50% X. So, so we are saying here, I repeat, X, which is our sales, is equal to the cost, which is 12,570,000 plus 50% X. 50% X. We are told the margin is 50%. The margin is 50%, and we said the margin is applied on sales. So this is 50% of the sales, which is X. 50% of the sales, which is X. So we can rewrite this. We can rewrite. So this one is simply equal to X is equal to 12,570 plus 0.5x. 0.5x, converting this into decimal. Converting this into decimal, we have 0.5x. Okay? We want to work with the decimal and not the percentage. So converting this percent into a decimal, we have 0.5x, 50%. So we can now calculate this. It's mathematics, as I said. You group the like terms together. Group the like terms together. This 0.5x should cross to the other side so that we have x minus 0.5x, okay, is equal to 12,570. 570. All right? X minus 0.5x is equal to 0.5x, which is equal to 12,570. We are revising, please. We are revising. We are revising. Are we not? We are revising. So make x the subject of the formula. Divide x on the both sides. So we divide here 0.5. Divide here 0.5. That cancels with that, so that we have x is equal to, which is our cells. X is equal to 12,570. 12,570. X is equal to 12,570. We divide by 0.5. So I'm getting here 25,140. So x is 25,140. 25,140. 25,140 is the cells. This is cells. So that is the figure for cells. We have derived it, we have calculated it. So our x we substitute. We can see is equal to 25,140,000. That is sales. Okay? Remember, the profit which you are looking for here, you can work it backwards. We can work it backwards. Or we can come here now and say profit is equal to 50% of 25,140. Okay? 25,140 is equal to 25,140,000. 50% margin is applied on sales. Margin is a percentage profit on sales. Is a percentage profit on sales. So it is 50% on sales. Our sales is 25,140. So we get 50% of that. 50%. We get 50%. 50% is 12,570. 12,570. 12,570. So that is our profit. That is a profit. Okay? That is a profit. That is a profit. Profit. And that is the sales or the total revenue. That is the total revenue. Okay? It's very important. Total revenue. Remember, we've not answered the question. We are in the process. We've identified the numerator, which is the total revenue. We need to determine the number of patient days. And we go back to the question. By the way, this is just one method. There are many methods of determining this profit, okay, or converting. Remember, in our class, we talked about how you can easily convert markup into margin or margin into markup. We're not going to that now, but we will look at. We need to finish the question. We need to finish this question. Remember, we are supposed to calculate the charge per day per patient. We have determined the total revenue. Taking you back to the question, we need to determine the number of days, patient days, the number of patient days. Number of patient days, not number one. We are told the health center operated 300 days during the year. For 200 days, the bed occupancy accounted for 100%. Okay? It means there was bed occupancy for 200 days. 100% of 200. While the rest of the period, which is 100 days, there was only 80% occupancy. Okay? So, we need to determine the number of days. How do we do it? Number of days. Number of days. Number of patient days. Number of patient days. Number of patient days. I take you again back to the question. Back to the question. the number of patient days, we are given the beds. Looking at the first sentence, we are told that Afya Bora Health Center has a capacity of 20 beds, has a capacity of 20 beds. Okay? So each day, it means that each day, it means that there is a capacity of 20 beds. The capacity, it means the hospital or this health center can only hold 20 beds at any moment. There are only 20 beds. 20 beds. That is the capacity. We cannot have 21 beds, or that is the maximum capacity. The maximum capacity is 20 beds. 20 beds. So you are told that there were 200 days and 80% of the remaining number of days. So how do you determine the number of patient days so that we can divide with the total revenue to get the charge per day? The charge per day. Okay? To get the charge per day. So we need to determine the number of days. The number of days. The number of days. The number of days. So I can rub here, is it? Can rub this. This was clear. Another one method we didn't use in our normal class. We did not use this method. Remember, we didn't use this method, but we are revising. And don't forget, revising, it means improving. It's an improvement or an additional. Adding, revising, adding. We are revising, don't forget. So in this question, we are told from the question, we need to determine the number of patient days for that year. Okay? We are told that in a year there are 300 days. They operated 300 days. Out of the 300 days, we had 200 days that operated at 100% bed occupancy, 100%. So for the 200 days, you are told the bed occupancy was 100%. 100% of 200, that is 200 days. Okay? Then for the remaining 100 days, we are told accounted for, the occupancy accounted for was 80%. 80%. So 80% of 100 days, we have here 80 days. So during that year, you can see the total number of days. These are 300 days in a year. 300 days in a year. Okay? And out of the 300 days, you can see occupancy, the days that were occupied, the beds that were occupied, the number of days is equal to 280. 280 days during that year. But don't forget again, we've been told from the first sentence, we are told Afya Bora has a capacity of 20 beds. So if they operated for 200 days and the capacity is 20 beds, so how many beds are we talking about here? We are talking about the beds in question is amounting to 280 times 20. 280 times 20, this is equal to 560. Okay, so that is our number of patient days. So we have it. We can now calculate the charge per day. The charge per day is equal to the total revenue. Charge per day will be equal to the total revenue, which is 140. Divide that by 5,600. 5,600. So we take our calculator, we divide, that will give us our charge per day. Charge per day will be equal to 140 divide by 56. So I have here 44.89, 44.89, 44.89 shillings, 44.89 shillings, 44.89 shillings. So each patient was charged 4,489 per day. We have aggregated the total cost. Then we have divided by the number of patient days. So each patient was charged 4,489. Okay, that is part one of that question. Then part two, we are asked to prepare the number of patient days required to break even. Number of patient days required to break even. Required to break even. Okay? Required to break even. Required to break even. That is our second part of that question. That is break even. Break even. Break even. Break even point. Number two is break even. Is it? Break even. This is break even in, it's supposed to be break even in units. Break even the days, the break even in units. Break even in units. You can calculate break even point in shillings. When you calculate break even point in units, it's equal to fixed cost. Don't remember, fixed cost over contribution. Contribution margin. Okay? Contribution margin, the contribution margin. That is, we'll get the break-even in units. But if you are to calculate the break-even in shillings, we'll have fixed cost over contribution margin ratio. Contribution margin ratio. This is contribution margin or contribution margin or contribution per unit. Let me put per unit. Contribution per unit. Contribution per unit. Okay? If you are to calculate in shillings, then you'll have contribution margin ratio. Contribution margin ratio, that is important. From our question, we have the fixed costs. That's why we had to separate the fixed cost we have. Fixed cost we calculated 64,550. So we need to determine the contribution, and we know contribution. Contribution, we know the formula. Contribution is equal to selling price minus variable cost. Selling price, we know the selling price. So our selling price, remember, our selling price, we had calculated our selling price. Selling price is equal to 25,140 million minus variable cost. Our variable cost is, remember, 6120 is our variable cost. That will give us total contribution. So our total contribution here, I calculate 25,140 minus 6120 minus 6120. I'm getting here 19,020. 19,020 is a total contribution. Remember, these are totals. But for us to determine the break-even in units, we need contribution per unit. So what do? We divide, we determine contribution per unit. Contribution per unit is simply the total contribution, which you have seen is 19,020,000. We divide that by the number of units. Our units are patient days, which we calculated, 5,600. We divide 19 by 5,600. That will give us contribution per unit. So our contribution per unit here is simply we divide by 5,600. I'm getting 30. Contribution per unit is equal to 33.96. That is the contribution per unit. So therefore, what will be the break-even point? the break-even point in units, break-even point in units, break-even point in units should be equal to the fixed cost. Remember the fixed cost we had, we calculated the fixed cost in our statement. That is 50,000. We divide by the contribution per unit. Contribution per unit, we have calculated it. Contribution per unit is 33.96. That will give us the contribution in units. Contribution in units. Contribution in units. Contribution in units, we said, is equal to fixed cost over contribution per unit. The break-even point, break-even point is equal to fixed cost over contribution per unit. So the break-even point in units is equal to fixed cost, the total fixed cost over contribution per unit. Our contribution per unit is 33.96. Those are that is the contribution per unit. Contribution per unit. So we divide the fixed cost by contribution per unit. So we do that. That one is equal to 64.50. 64.50 divide 33.96. So I have the contribution in units coming to 1899. 1899 days. Patient days. These are we call them patient days. Patient days. These are the units. Break-even units. That is 1899 is the figure for the patient days. Figure for the patient days. What does that mean? It means that for this hospital, the name of the hospital is Afya Bora Health Center. For Afya Bora Health Center to break even means the point where the hospital is neither making profit or loss. At that point, they have to treat 1,899 patients. 1,899 patients. That is the interpretation. So that is our break-even. That is our break-even point in units is 1899 patient days. That brings us to the end of our revision class today. Today we have calculated the past paper question December 2014. We have come to the end of our revision class today, in which we solved this problem. We solved this problem that was examined in December 2014, question 1. We solved the problem. We'll be solving other problems on this website. Make sure you are on the lookout for other revision videos. We'll be uploading more revision videos as far as revision of management accounting is concerned. Remember to give us feedback in the event that you are encountering any problems as far as management accounting is concerned. We'll be glad to solve the problems together as we have done today. Thank you very much.